Start investing in gold and silver at sdbullion.com today and join over 35,000 precious metals investors who have made the switch to the lowest gold and silver prices in the industry. SD Bullion recently claimed a spot on the prestigious Inc. 500, making them one of the fastest growing bullion companies in the United States. With low bullion prices and over-the-top customer service, SD Bullion is setting the standard for precious metals transactions. Visit www.sdbullion.com today. Start saving on every precious metals purchase you make.
Hey everyone, this is Elijah Johnson with silverdoctors.com, and with us today is Phillip Kennedy from Kennedy Financial. Phillip, thank you so much for joining us today.
Thanks for having me on, Elijah.
Now, first, could you give us an intro, a little bit about what Kennedy Financial is and basically your area of expertise?
Sure. Well, I'm a financial counselor by training as well as a CPA. And really after the 2008 financial crisis, I was getting an MBA at the time. And while I was studying at George Washington University, my professors were coming out and saying things like, well, there was, capitalist greed that has brought on this financial crisis. And to me, that just didn't sound reasonable. So I began to dig deeper and I found, Tom Woods in the Austrian school. And that's really where I began to understand Austrian business cycle theory and really comprehend just what interest rates, how important interest rates are to a real functioning economy. And now it is, here we are 8 years later, and the bubble's only grown bigger. So what I decided to do was start a pro bono effort called Kennedy Financial. And what my brother and I do is reach out to at-risk middle-class families as well as low-income families and try to get them on track toward a budget, a savings plan, building up an emergency fund, and beginning to invest, and all the while explaining to them how the economy really works and really the problems that are under the surface in the U.S. economy right now. I mean, everyone seems to think that, hey, it's fine. The Dow is approaching 20,000, and we're now starting to raise interest rates. It looks like the Fed really did the right thing. Everything seemed to have worked. But the fact is that really they've even blown up a much bigger bubble, and we all need now to prepare more than ever before. So that's really what I'm trying to do, is reach out to those folks who are most at risk in this next bubble, which is something that I'm calling the much bigger short. If your audience, I'm sure, saw the movie The Big Short and read the book, this is going to be the biggest short of all. This is the mother lode. I think this is the final straw for the dollar. And we've got a hard road ahead. So if I can get in touch with as many folks out there as possible and explain to them what's coming, then maybe they can prepare in advance and weather what I think is going to be, as Doug Casey says, the Greater Depression ahead.
Now, with the holidays coming up, with Christmas and New Year's and people, visiting family, some of the time, these kinds of things come up in conversation, and, people really want to let their family know their mindset and where they believe the financial system is headed and maybe how people can prepare, and they really want to help their family. And I think maybe a lot of our viewers are in that position right now. So in your mind, what is the best way to kind of relay this information to relatives and friends?
Well, first, as we discussed in the pre-interview, I just want to reiterate the fact that I know your listeners are smart. I've heard your interviews in the past. You've had some of the best guests out there. So your audience is some of the smartest people. They understand what's going on, and they've been preparing for a long time, building a precious metals position, investing in stocks that have exposure to the metals and things like that. But I guarantee you, because we all have extended family and relatives and friends, I guarantee you they can immediately right now, while they're listening to this show, think of at least 5 people they know that they're close with that are absolutely clueless. They have no idea what's going on. They're either willfully blind or they just have no real understanding of economics or personal finance. They take Brian Williams' word for it on MSNBC. They think Janet Yellen is at the Fed because she's really smart. And it couldn't be further from the truth. So my goal, I probably can't be of service to many of your listeners, but I guarantee you that my brother and I at Kennedy Financial can be of service to their friends and family. So, when they're at the dinner table for Thanksgiving or Christmas and they're having an argument, and I know these things happen in every family, they're having an argument, they're trying to explain, look, the Dow at 20,000 is not a good thing. This is 1929 all over again, or 1966 all over again. We're not going to go much higher in real terms, in my opinion. The fact is that I think if you were looking at the chart of the Dow Gold ratio, we're closer to like 1976, 1977 as a comparison, rather than 1981, 1982. So I say the remainder of this decade, there's going to be a major wealth transfer, and it's up to your listeners to try to become evangelists and spread the word and tell friends and family, look, if you're not going to listen to me, listen to this guy. He does it pro bono. They can call me up. They can send me an email. And I've been on, I'll do a telephone conversation with folks for up to an hour. And I've done that before with other listeners. And we just talk it out. And, sometimes when you're related to someone or you're friends with someone, it's hard to get them on board. But when they're listening to someone, and, I have all the mainstream credentials, right? I'm a certified public accountant. I'm an accredited financial counselor. I've studied for the CFP exam. I have an MBA. But frankly, none of those matter, right? What really matters is understanding real economics. And that's what you and I understand, Elijah. Unfortunately, so many people have been brainwashed by Keynesian economics and made their living at it that they really don't know what the truth is anymore. So that's really what I'm here for. I think that's how your audience can best serve their friends and family through my free service.
Now, one of the things you also discuss on your podcast is this idea that investing in precious metals is a good way to prepare for this coming financial crisis. But a lot of people might be discouraged, I guess, because precious metals for, the past couple of years have not performed very well. And one of the reasons for that, that you think is not necessarily because, there's not enough demand, but actually because the powers that be, if you want to kind of expand on this and get maybe more specific, are manipulating the price of gold and silver. And this isn't some kind of conspiracy theory, you say, but a conspiracy fact. Can you expand on that?
Sure. Yeah. So I'm kind of in the GATA camp. I believe that gold and silver has been manipulated to the downside for well over a decade, probably two. And there's a good reason for that. I mean, think about it from the standpoint of the U.S. government. The best measure of how your currency is doing is against real money, and that's gold and silver. So if the price of gold were to suddenly skyrocket up to $5,000 or $10,000 an ounce, then it shows you that the dollar is really worthless as a currency, as a medium of exchange. So it would behoove them to kind of look the other way and just let these banks smash the price of gold and silver at will. And now here it is, the Deutsche Bank revelations have come out and they've settled for a meager sum. Many experts believe that it would have been in the tens or hundreds of millions, if not billions of dollars, if they really were to uncover the total fraud scheme. So I think that, really, this is a buying opportunity. Mike Maloney says it best. We know precious metals are manipulated to the downside, and we shouldn't be able to purchase them at these low prices. So we definitely should be taking advantage of it. But, this was a conspiracy theory for many years. Now with the Deutsche Bank revelations, it's conspiracy fact. I think, what's his name? You might be able to refresh my memory. Is it Nick Laird or someone like that? Mike Maloney did a video on it. And here he is. He's mapping out the smashes on precious metals along with the communications between Deutsche Bank and the other banks who were colluding to crush the price. So I think that with this information, it only should embolden your listeners if they've been buying metals all along. Maybe they bought gold at 1900 and they're really disappointed. We can't go back in time and, hoard our cash and then wait for the bottom when, say, silver got down to 13 or gold was at 1,000. All I really know is that in real terms, these metals have a long way to go up in terms of buying other things, whether that be the market, real estate, things like that. So just don't get discouraged. You're not buying these to sell them right away. You're buying these so that you can one day spend them and retire with dignity. So now's the time to be accumulating, dollar cost averaging, and use this manipulation, frankly, to your advantage.
Now, you've talked about how one of your missions is to help especially low-income investors. Now, for low-income investors that don't have a lot to invest, what is your perspective? If they say, well, I can't buy a lot of gold and silver, what is your perspective on maybe some options that they have?
So my first recommendation is everybody needs to have a real cash emergency fund. And frankly, this is something that isn't spoken about enough in our community, the hard money community. I've spoken with people who follow my show, and I'll talk to them for 30 minutes or an hour, and I'll find out that they have like $10,000 in silver eagles and not a single dollar parked in their savings account. And that's because they've been led to believe, look, the economic apocalypse is right around the corner. Cash is going to be worthless. And frankly, that couldn't be further from the truth. I think, we tend to overlook a lot of things, when we get focused on what the Fed is doing or what Bernanke has done or what Yellen has done. The fact is we got to live our ordinary, normal lives. And that includes estate planning. That includes life insurance and disability insurance and an emergency fund. So my recommendation to folks starting out is, first, get out of debt, save up $1,000 of cash, continue to get out of debt. Once you're out of debt, build up, say 3 to 6 months, or maybe even upwards of 2 years, depending on your situation, of cash reserves and an emergency fund. Yes, it won't be earning much interest, but that's really not the point. This is your own little insurance policy in case something goes wrong. And then after that, I'd say, anywhere from 3 months to, again, 2 years of hard money, gold and silver. I prefer silver eagles, and, just start working your way up there, dollar cost averaging. But all the while, you got to have a life insurance policy, especially if you have kids. You got to have disability insurance. You're statistically more likely to need that in life than even, a life insurance package for your family. Without those other basic things, you're kind of overlooking what is a traditional estate plan. So those are just some ideas. And if your listeners have any other questions, they can definitely contact me, and we'll give out my information at the end of the show.
Definitely. And one of the other things I was going to discuss with you today is why, in your view, do you think that the stock market is so overvalued? You talked about how, earlier in this interview, the Dow is nearly 20,000 points right now, and that it's kind of approaching a level kind of like it was in 1929, right before the stock market crash and the Great Depression. What are some of the fundamental reasons you think that the stock market is overvalued right now?
So we were actually joking about this on my show recently. It seems like a memo goes out, right, when certain things happen, whether it was the election, right? Suddenly we start hearing about fake news. And then next it was about, the Russian hacking. And then after that, it's the Electoral College, is not going to vote for Trump. And it's almost like back in the day, a fax would go out or something. And now it's probably an email. And everybody just immediately gets on board, and it leaves smart people scratching their heads and saying, where is this coming from? And so the thing that I've really been astounded by recently is this phrase, the Trump rally or the Trump bump. And it's almost like, November 9th came, Trump won, and a memo went out. It says, okay, folks, this is going to be called the Trump bump. Just go with it. We don't really know what's going to happen, but just go with it. And it's like the Trump winning the presidency was every bit, if not 10 times more unlikely as Brexit, right? This should have surprised and rattled markets, and it did, right? In Asia, suddenly the Nikkei was down like 5% and gold shot up. And then by morning, suddenly that it reversed course, and then everything was up another 5% the following day. And it just made absolutely no sense. So I call that the old turtle on the fence post. You see a turtle on the fence post and you say, how did it get there? To me, this doesn't make any sense. I think it's a sucker's rally. I'm not buying it. I don't think your audience should either. I think when looking back, I heard Bill Holter the other day, and he's a guy I respect. He says a lot of smart things, and he says, this is almost like a manipulated effort. It's like a last-ditch effort to try to fool people into the market and out of safety, gold and silver, so that the powers that be can then reap the rewards down the road. And I hate to say it, but I almost feel like years from now, we could find out the Fed was in there buying stocks right now, and it wouldn't even surprise me. I don't think there's anything real to this upswing. I think if folks are participating in it, they're just as foolish as those who were bidding up the dot-coms toward the end of the 90s. So, do your own due diligence, talk to a financial advisor, but I think the best idea would be to stay away.
Now, what impact do you think the recent Fed rate hike, which only 0.25% it raised interest rates, which doesn't seem to be much, what impact do you think that'll have on the stock market and precious metal markets?
So temporarily, I think just like last year, when they finally had the guts to raise interest rates 0.25 point for the first time in 9 or 10 years, I think it'll temporarily scare a lot of people, especially since last year they said, hey, we're going to hike another 4 times. And now they're saying this year that in 2017 they're going to hike another 3 times. I think that it's going to, again, shake out some weak hands. But in the long run, these interest rate hikes are not going to keep up with the real rise of inflation. And as we've learned from history, sometimes in an interest rate hiking environment, that's when gold performs best. So they're going to have to hike these rates so far and so fast to keep up with the real momentum of the price of gold. I think they would have to, just like the late 70s during the malaise of the Carter administration, they're going to have to get upwards of the teens, the high teens, the low 20s before they finally break the back of gold and silver. By then, we'll have seen it surpass a 1-to-1 ratio on the Dow Gold ratio. And, that's when your folks will be smart enough to be getting out of the metals and buying things that are cheap. And that's when your taxi driver, your Uber driver will be telling you what a great investment gold is. And that's when we'll all know it's time to get out. But there's no way they're raising rates 3 times in 2017. I went on record the day after the Fed raised rates. I think it was December 17th, 2015, and said, no way they're raising rates even 1 time. So, hey, I was wrong. But in comparison to all the big banks, JP Morgan, Barclays, they all said, hey, at least 3 or 4 rate hikes. I'll be right again. I say 0 rate hikes in 2017. If they only get 1 and they were calling for 3, then I still say that I'm closer to being right than everybody else. I think you can almost bet on it. It takes a lot of courage to do the right thing. And when it comes to the Federal Reserve, just look at their track record. They're as cowardly as a lion. Every time they, should do the right thing, they almost always don't. And I have no problem being wrong, by the way. It's almost that we have a little advice on our show. We say, look, if you're a Patriots fan and they're in the Super Bowl, the last thing you want to do is bet on your home team. You want to bet on the opponent. And in this case, I'd like to see interest rates hiked. I'd like to see it and do it faster and just get the air out of this bubble as quickly as possible. So I have no problem going out on a limb and saying that they won't ever hike, because when they do, it's almost like, you're taunting a bull. I'm willing to taunt this bull right over a cliff, and I think that's ultimately what's going to happen. This bubble is going to get popped. Everything's going to come crashing down, and we're all going to find out all over again that Keynesian economics is every bit as useful as a witch doctor.
Well, Phillip Kennedy, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where our viewers can find you online and contact you?
Sure. Well, my final thoughts would be, remain strong. I know it's difficult. It's always difficult being a contrarian and going against the grain, but really right now is probably the best buying time for the metals and the stocks. We already saw a run up through the year, if you were not in the mining stocks from, say, January to July, you were left by the wayside, and you saw, some of these stocks go up like 500% or more, maybe some or even 1,000 for all I know, and they're probably still up on the year. So look at this as a buying opportunity. It takes courage to buy on the way down rather than on the way up. And in terms of the next step they can do, for your listeners, they can go to my website, phillipkennedy.com. That's Phillip with one L, Kennedy.com. And they can download my book, Financial Judo, for free. Just give me your email address, and there's a directions, little video on my website that explains to you how to do that. Also, they can get the audio version for free. They can follow me on Facebook at Kennedy Finance, as well as on Twitter at Kennedy Finance. And they can always email me, phil@phillipkennedy.com, and I'll answer whatever basic question they have.
Once again, Phillip Kennedy, thank you so much for your time.
Thanks, Elijah.